It's 1 o'clock, and with that, a very warm welcome, everybody, to today's ClimateChoice event, number 94 already. It's so great to see many more people joining here, and quite some new names actually here also within our invitation list. So that's amazing. And for everybody who doesn't know me yet, I'm Josefa Niebeschütz, the head of growth and ecosystem at ClimateChoice, and also host of this Choice Event series. And if you do not know ClimateChoice yet, well, then it's also a chance for you to get to know us, because we work with procurement, sustainability, and business teams all around the world on a very practical challenge, namely the collection or crawling and then also standardization of company and supplier climate data. Because what we really want to do is to turn Scope 3 from a reporting exercise into something that actually works operationally inside companies and supply chains to move joint decarbonization action forward. And this is also what our choice events are about. So we don't want to stick to theory here, don't want to have generic ESG conversations, but we really try to foster very honest, practitioner level discussions about what it takes to move from ambition to execution. And today's session is called, as you might have all seen in our invites, Inside the Mind of a Scope 3 Auditor. And I guess that this title also reflects let's call it shift that potentially many organizations are also currently experiencing. Because, for years, the focus on Scope 3 was really on measurement and disclosure, but now we are entering a new phase where Scope 3 numbers are increasingly being scrutinized. If you look at it, of course, from the auditor perspective and regulators, but also investors, banks, and even increasingly customers. And this also changes the conversation, because as you will see today, the question will no longer just be, do we have Scope 3 numbers in place, but also do we have the right governance and control systems in place to ensure traceability, but also credibility of supplier data. And this is why we want to look at the piece of Scope 3 audits from 3 different angles today. First of all, we want to have a look at the why audit pressure on Scope 3 is actually increasing. Secondly, also looking at the what. So what are auditors actually reviewing when they look at Scope 3 upstream? And then we will also be looking at how companies can actually build supplier data structures that actually stand up under scrutiny. And I'm not an expert in any of these topics, and this is why I'm also very happy to be joined here by the expert on stage. And with that, I would also love to introduce you to who will be here with me today. Now, our first speaker actually spends her time exactly where many companies will soon find themselves, namely on the other side of the table during a sustainability, on particular Scope 3 audit. And her work focuses on evaluating how companies structure their Scope 3 reporting, not just from a numbers perspective, but also looking at processes, governance systems, and internal controls behind them. And one key shift that she is observing right now is that the audit of Scope 3 emissions is shifting from pure data validation towards an assessment of supplier governance and internal control systems. And with that, I'm very happy to welcome Franziska Renzsch, Senior Manager Sustainability Services at BDO Germany, with me today here on the virtual stage. Hi, Jenny.
Hi, Josefa. Thank you.
How are you doing?
Fine. You?
Very good. I'm very excited and very much looking forward to this session because, the pre-discussions were already so interesting. I learned a lot, so very much looking forward to also pass on this knowledge to our audience. Thank you. Yeah, well, and then, actually, the second speaker is a co-worker of you because he is, supporting Jenny and the team, then also walking companies really through Scope 3 audits and looking at assurance levels together with us today. And one of his key observations cuts through a common, misunderstanding also in this space, because many organizations, at least as I learned now also from Jenny and her colleague, are looking at Scope 3 really as a primarily like calculation problem in audits. But in practice, the results often depends far more on something else, namely the quality, comparability, and documentation of the underlying data. And with that, he comes here on the stage with the statement that Scope 3 reporting is less a calculation challenge and more a data challenge. And with that, I'm very happy to welcome Gerrit, who is also working at BDO Germany as the manager for sustainability services. Hi, Gerrit.
Hello, everyone, and thanks for having us. I'm really excited for this session today.
Yeah, so cool that we're having the two of you here today. And some of you who are joining the session here might also already know Gerrit from a very cool keynote that he had at the last Climate Transformation Summit. So second venture for us to work here together. Super nice. Thanks. All right. And now the third perspective that we want to bring in today is shifting us a little bit away from the audit expectations more towards operational reality. Because inside many organizations today, Scope 3 inventories still rely heavily on averages, assumptions, and secondary emission factors. And that often works, but only as long as Scope 3 then also remains a reporting exercise. And this is where ultimately the credibility of Scope 3 numbers also lacks potentially the traceability across the supply chain. And so our third speaker comes in on the stage today with her statement of, if you can't trace the data, you also can't use it. And with that, I'm very happy to welcome here today Lara Obst, who is the co-founder and chief climate officer of our nice company, ClimateChoice. Hi, Lara.
Yeah, hello. Great to have you, everyone, and excited for this session today.
Yeah, me too. And before we dive into the topic, I would really just like to start the session with a mini round of short reflections. So Jenny, Gerrit, and Lara, maybe one after another. If you had to sum up the current Scope 3 moment in just one sentence, what would it be? What comes up to your mind?
I'll just jump right in. I think for us, we mainly see a shift from generic data to actually supplier-specific data to be able to track the improvements of your Scope 3 footprint, but which also includes increased demands on governance and control systems.
Thank you. Gerrit, what about you?
Probably the same direction. We see an increase in procurement departments shifting from price and quality of the purchased goods to price, quality, and CO2 emissions, which is becoming an increasing factor in decarbonizing the whole supply chain. So, yeah.
Thank you. Yeah, bringing in the procurement perspective, I guess, Lara, this is going very much in line with your field of topics. So what about you? How would you sum up the current Scope 3 moment?
Yeah, I would say, it's not about assumptions, about real data. And as you say, current assumption, I would also take the political context. I guess Scope 3 is also always about collaboration and partnerships. So whatever you have about risk resilience and also the possibility to focus on collaboration and increasing positive relationship globally, I think that's also where the magic of Scope 3 data is, to look out of your country's perspective maybe, or your own company, and really go into the broad field of how can we work together to create value.
Yeah, thank you. And I mean, we now already touched upon the piece of data usage of that data, then actually in procurement function to really steer decision making, but then also, yeah, I mean, the proper collaboration that comes thereafter for decarbonization action, as Lara was also just mentioning. And we will be diving deeper also into these topics in the context of Scope 3 audits. I actually find quite interesting that we will be touching upon so many different perspectives also today. But before we start, I would actually like to invite Lara to also share a short survey with the audience to get you all activated, because I mean, we want to have this also as a collaborative session. So you're invited to ask your questions at any point in time, but also want to know who you are, where you're coming from which department and whatnot. Lara, over to you.
Yes, so you should have it popping up on your screen if you allowed Zoom to have that function. Otherwise, I'm also reading it out. So there are 3 questions in one, actually, if you scroll down. First one is just, we're going to be talking a lot, I guess, on the stage about us or the speakers. But then, we want to learn about you. So which area are you working in? Is it procurement, supply chain, sustainability, finance, product, or other? Because we see scope 3, as Josefa said, is touching so many areas in the company already, which is good. And then the second question, are you already collecting scope 3 data? So do you know the pain about all the topics we're going to talk, methodology, quality, availability of data, and so on? So yes, indirectly, not yet, no. You can choose from that. And then the last question very much goes into what we have as a focus topic today. So are you already ensuring that this data you are collecting is audit ready? So we have different options, rely on suppliers have reported data, or you perform already some plausibility checks, or you have a defined process that assures already quality, or you have a data control framework that's already used from auditors to review the whole data you are generating. So last question is very specific. And I saw there are quite some answers coming in. Most of you dare to click on it. It's anonymously, so I will not share afterwards who has said what. And I leave you the last few seconds, and then I stop it. And again, I can also share the results with you. So you should have them on your screen. So most of you come from the sustainability department. That's already great to see, like around 30-ish%, something like this. Then from procurement and finance, and some also from other. And then are you collecting already scope 3 data? Yes, in action. That is the biggest group, which is already great. And then indirectly, we are using databases. And then no, not yet, and planned, or no, are also, some, but not so many. And then which kind of data system do you use to have audit-ready data? We rely on self-reported supplier data, and we have plausibility checks run both on the same first place, so to say. And then a few of you just say, we have defined processes or a framework, but those are just 2-3 answers, so not that many yet. And now I can click it away on my screen. I think you have to do the same on yours. And then I see you people again.
Thank you. Yeah. And I guess, as we've been seeing, right, it's quite a diverse field also of people here today. But the topic is important cross-functionally, because, it's a cross-functional effort also to get it right, so to say. But with that, I would really... It sounds weird, but I wanted to invite Jenny and Gerrit to help us step into the mindset of an auditor. But this is basically what we want to do. Maybe not the mind, but at least the shoes of an auditor. This is what we want to have a look at today. Really understanding why is it actually that audits are relevant for so many different people, for so many different companies also, even for the ones that might not consider it from the first piece. And then also, what is it really that auditors are reviewing, particularly in scope 3 upstream? And I guess this is what is also important for our audience today. How can companies really make sure to prep in order to walk through the next audit? All right, and to have everything in place. And with that, I would like to hand it over to Jenny and to Gerrit. And everybody else, please also remember that there is the possibility to ask your questions in the chat function. So you have a small icon in your screen below where it says chat, and there you can type in your questions at any point in time. I will either ask them in between or at the end of the presentation. And with that, over to you.
Thank you very much, Josefa. We'll try our best to let you walk a mile in our auditor shoes. Let's see if it works. So, I don't think we need to introduce ourselves again. We already had this pleasant introduction by Josefa, so I will start directly with the contents. We want to start with a quick overview of what can be audited, on what basis, and why maybe even should it be, or why should something be audited. First, we look at audits based on specific regulatory requirements and international standards, namely with the CSRD and the ESRS, which are the reporting standards framework for the CSRD. The sustainability reporting is now on par with the financial reporting. For companies in scope of the CSRD, an external audit of their sustainability reports or statements will become mandatory once we have the regulation translated into German law in Germany. Specifically looking at CO2 and climate information, we audit according to the Greenhouse Gas Protocol and verify targets against the Science-Based Targets Initiative to ensure they are scientifically sound and solid. The second pillar is the audit of voluntary claims or specific KPIs that are company-specific. So basically what companies communicate voluntarily and directly with the consumers or the customers or investors to increase their transparency voluntarily. We have specific metrics. For example, when we state that scope 1 and 2 emissions per product are XYZ, an audit provides the necessary credibility. This also includes forward-looking statements, such as we plan to achieve net zero by 2040, for example. Such a claim, we have to audit the underlying transition plan to verify that it's not just a marketing statement, but a solid strategy to achieve this net zero in that set timeline. And on the product level, we have claims like the product is CO2 neutral, where we would go and audit the underlying life cycle assessment, the underlying data of the LCA. So auditing these climate-related claims, just on a side note, becomes really important in light of the upcoming Empowering Consumers Directive, which aims to prevent greenwashing and ensure that sustainability claims are backed by actual facts and not just vague statements that have no real numbers or meaning behind it. So I think this sustainability statement or climate statement topic will become increasingly important during this year's for companies. And the big question, why even audit? So besides the regulatory compliance, of course, I just mentioned the CSRD itself calls for the integration of the sustainability statement into the management report, which means that we have identical standards such as for the financial reporting and also identical fines or sentences if let's say a statement is incomplete, preparated or misrepresented or even intentional concealment. So there is a regulatory compliance risk, let's say. Second of all, probably the most important topic for companies is the market pressure. Even companies that are not subject to CSRD requirements may be incentivized to have their PCF data externally verified due to supply chain effects. In scope 3, my data output is becoming the data input of my customers. Missing or unverified data on my side might lead to a data gap in my customers' data. And that's why failing to provide audited PCFs or carbon data might slowly lead to being replaced by other competitors, which are able to provide audited or verified PCFs in a better quality. And last but not least, the financial or strategic value is an important point. So rating agencies prioritize audited sustainability information because it guarantees, for example, a net zero plan is not just a nice story, but a solid concept. And also banks are increasingly linking interest rates to ESG performance with ESG-backed loans. From their point of view, audited data means lower risk and therefore a lower cost of capital for the companies. So to sum up, an audit isn't just a cost, it's an investment in transparency that prevents future greenwashing lawsuits and ensures access to customers who actively pursue sustainable procurement and have standards for their suppliers. Now, to zoom a little bit out of the scope 3 topic, just a brief overview of how we conduct audits, so you get an idea of how the typical audit process looks like. We have a pre-assessment phase where we usually do a risk assessment, which is an initial assessment of where we as auditors see the main risks for material misstatements in the sustainability report, or errors in the data quality, or errors in the data itself and the KPIs. This is always based on sector, business model, etc., and the importance of the information to the stakeholders. So a little spoiler, climate data usually is of really high importance for stakeholders, and therefore it's a focus topic in almost every audit. So climate stays relevant even when looking at the whole sustainability report itself. We review the processes and systems to access or to get the data, to consolidate the data, and we try to get a really good understanding of the whole data path. Where's the data come from? What's happening to it until it lands in the report at the final stage. In the main assessment phase, we look at the data itself after it has been collected and consolidated. So we make an in-depth data review if we find errors or if something's not correct. And just on a side note, we also, of course, look at the report, at the text and the chapters. Are the chapters, is the text statements in accordance with the standard, with the ESRS, for example? Or we collect evidence regarding important text statements. Let's say there's a text that says we have an EcoVadis gold rating, then we would ask for evidence, and so on. And special importance, of course, is on the balanced reporting. We call it balanced reporting. Basically, that means, does the report provide the information with a neutral tone, or is it exaggerated? Is it a marketing tone in the report? We try to be as neutral as possible in the reports. And of course, is only the material information in the report and not just everything that the company thinks can be important, but actually is not really material information for the stakeholders. And to complete this review cycle or audit cycle, we prepare and issue the assurance report once we have conducted the audit, and finally we prepare a presentation with the main findings and give recommendations for improvements in the future. Where can the processes be adapted to create better data or to just improve? So as an exemplary data path, so we can now deep dive again into the data path of the Scope 3 emissions. We have an exemplary data path brought here. So the purchase order is being created in the ERP. Some supplier provides their data, their PCF, their primary data. Then we enter this data into some template. We have some kind of data capture. We consolidate with the emission values, aggregate the data, and in the end, we have some upload or recording into the ESG tool where the information is being reconciliated and maybe prepared for some internal or external reporting. We will look at this data path and the process, and we will perform sample-based checks on the data sources, maybe at selected suppliers, probably the bigger ones, and also internally. The relevant slides that we typically ask for in an audit would be the supplier PCFs in the original form as an evidence document, ERP extracts, transport data, and the underlying assumptions that you took. Usually there are some kind of assumptions and calculations that have to be reviewed. And of course, an important point, the emission factor sources. Expect questions like, what controls exist in all this process? Do you have certain controls where probably or where maybe manual steps are involved, where there's not an automated system, but manually data is being transferred? Then we all really like to see controls that there's no errors happening in those manual steps. Responsibilities, also an important topic. Who's responsible that this data point is going to enter the next phase and stuff like that. So these are the kind of questions. Also guiding questions from our point of view is it's clearly defined what exactly is being reported or assured, because sometimes there's just nothing written down on how the KPI is being calculated, and person A in company A is reporting something else than person B in another subsidiary, and in the end you can't really consolidate all this information because nobody really knows the exact definition of what is being reported. The methodology should be consistent and documented. Also, we are looking at the system boundaries, if they are transparent, consistent, and traceable along the process. And of course, is there a clear distinction between where estimates are being used, where primary data is being used, and what assumptions have been taken. A big topic of discussion is always the question of materiality and cutoffs. So for materiality in scope 3, we often see that a small group of suppliers or raw materials accounts for a vast majority of emissions. You should not chase every minor purchase, but rather start with focusing on the hotspots and increase data quality there. The higher the materiality, the higher our or the auditor's expectation for primary data. For example, for a steel manufacturer, steel scrap is material and needs high quality data. But office supplies, on the other hand, would not really be material for a steel manufacturer and can often stay as industry average estimates and doesn't really need primary data at some point. The topic of cutoffs is kind of the justification for excluding certain data points in order to keep the assessment manageable. You cannot go into every minor detail and data point because at some time you'll go crazy, right? So typical thresholds we see or we expect or accept as auditors are on a flow or process basis is it's smaller than 1% of total mass or energy, whichever is higher. This way you can exclude the inputs that are not really material from the auditor's point of view. And when looking at total exclusions, we typically see thresholds of 5% of total mass or energy or 5% of total CO2 emissions. So ensure a completeness of the inventory of 95 or up to 99%. And important, always document materiality thresholds and cutoffs so it's being applied consistently throughout your calculations and can be reviewed by the auditor. I just mentioned the higher the materiality, the higher the auditor's expectation for primary data. And as you can see here on the slide, of course, the higher the primary data share in the data, the more complex the data process gets, and also the more complex the audit gets from our point of view, right? But also from a company's point of view, it makes sense to go to primary data and take this the work to get primary data for the hotspots where companies want to effectively manage their scope 3, because we have a correlation between ease of collection and management potential. While spend-based data is the easiest to collect, it only offers limited steering or management potential. And as we go to activity-based or supplier-specific data, the initial collection effort increases, of course, but so does your ability to identify reduction levers and actively manage the supply chain decarbonization. On the next slide, I will be presenting just some high-level challenges before we bring in some real-world examples of or examples of how spend-based approach can lead to different and uncomparable results, and we take a look at that in a bit. But just a brief high-level challenges in CO2 accounting. The responsibility topic is always big. There are different people in procurement, and who is responsible for the scope 3 data must be clear so that everybody knows who is doing what and what is whose responsibility, right? This is a big topic from an auditor's perspective, but because oftentimes we look into companies, we talk to the people, and actually nobody really has an idea of who is responsible for what, and it gets really messy, let's say. The topic of processes and controls especially is important. We look at the controls in the process. Are all, I just mentioned, like, are there manual steps in the process that pose a specific risk for errors? Because we are all humans, we do errors and stuff like that. So are there adequate controls to tackle these critical risks in the processes. We have the point of data quality and availability, of course. Do I have the activity-based or the supplier-specific data? We have the costs and resources. Do I have the capacity and the support internally also in my company to conduct an in-depth CO2 accounting and scope 3 data calculation? Because oftentimes we are faced with people who really want to do it, but do not really have the internal backing and the budget to really do a proper work. Goal setting. So we often see reduction goals, but of course reduction goals are important, but also data quality goals are of increasing importance, especially from our point of view. When we audit a CO2 accounting or scope 3 data, we can make our check marks. We can say, okay, this is great, but usually we want to see improvement in the next year, right? We want to see how the company is moving forward, because there's always some kind of improvement, and nobody has the perfect scope 3 data already.
Gerrit, there's one question also from the audience. I mean, looking at all of this, I guess, I mean, data quality, there's like certain, thresholds then also to it, some particular like properties. But there's the question of what kind of like processes or internal controls actually give auditors confidence that supplier data or that the CO2 data is credible. So can you just give an example there, a practical one of what you see and where you would say, yes, check mark?
What I really love is if our customers or our companies like look at the process also from an auditor's point of view, let's say, and they look at the process and say, okay, at this point we have a risk, and at this point we have a risk, and then they write it down, they document it where they see the risks in the process and how they tackle these risks. And if I see this in a written down form already, I love it as an auditor, because that's usually just from companies that are more experienced in audits, that have reasonable assurance on their data. They have to have those risk control metrics. But of course, it's rather obviously, but to write it down and prepare it for the auditor and think about how can I tackle certain risk with controls is the first step. Okay,
so basically the transparency goes over pretending to have a perfection in place.
Yeah. And usually when you talk to the people, they say, of course, we have a 4 eyes principle within our department, of course. But once it's documented, it's easier for us as auditors to review it, to make a check mark. All right, they have this 4 eyes principle in place, and it's not just talk. Let's say it like that.
All right, thank you.
All right. And I will hand over to Jenny now, who is going to deep dive into some examples.
Thank you very much, Gerrit. I will dive into a few examples of troubles and pitfalls we've encountered in the last few years when we were auditing Scope 3 data and also CCFs overall. So I just start with a real life example from last year. We had basically the Scope 3 emissions calculated by 2 different databases, 2 different providers, both span-based approach. And as you see here, we had almost a difference of the factor 2. So on the next slide, can you just jump there? You see it here. So that's one of the major problems we encounter, especially with span-based data. In this case, it was different databases with different emission factors, but also these very general categories of administration support services, broadcasting, telecommunications. Basically, what the company considers to fall under this category can differ as well. So that's how also these databases differ. So at the end, we would always advise here. We know that we have this problem. At the very beginning of your Scope 3 journey, sometimes have delivered it, especially if you're in the situation that you have to provide a sustainability report and you're at the point of, okay, I have to somehow calculate my Scope 3 data. But we would always advise to actually jump into supply-specific data, at least for your major categories. I mean, if you just jump back one slide, sorry, I'm just jumping a bit forwards and backward. As you see here, for example, the major category is purchased goods and services. So where you could use those data for is look, where are your hotspots, where you should actually look for supply-specific data first. Well, on the other hand, stuff like business travel or sometimes office supplies or so, something where we say, okay, keep spend-based data, that's not worth the effort. So one of our major points is actually look where you can get the most data quality improvement with the least effort for you. I know sometimes we have the question of companies saying, okay, we want to do everything perfectly, but there are some suppliers who just don't give us their data. And I'm like, okay, if it's not a major supply, we don't need it for every pencil. So that's one pitfall we have here. Sometimes companies are not good at finding the sweet spot between having good data quality and the amount of time they invest in gathering the data. So actually look, where are your hotspots here? Then for the next example, I have to look a bit at the time. So one major problem we had, especially last year when we had the first wave of CSRD reporting, that we had PCFs. Companies wanted to use supply-specific data, which was really good from first impression. But when we actually looked into the data, we found problems with comparability. One example we had here where basically for aluminium, we had 2 PCFs and the second one was almost double the amount. The reason was here in this case, the supplier 1 had data cradle to gate, which is, if you just consider scope 3.1, enough. If you the other supplier actually had cradle to grave, so the whole downstream emissions as well, which is which then you would have to split up again into the scope 3.1 and the downstream emissions here. So the question is, how do you handle these cases? Just jump forward, please, Gerrit. The reason here was actually our client tried to make the work easier. They basically told all their suppliers here, please, we have a simple online platform, please enter your CO2 data. We need your product carbon footprints. Yeah, and then we had the case of the data is not comparable. And then that's automated, and then more and more companies are automating their scope 3 emission calculations, their product carbon footprint calculations, and in the worst case, you enter data that's not comparable. And at the end, we are the people who get the results, and then we have to say, okay, actually go back to your suppliers. The data going in is not the quality we need here. So usually it's not a question of calculation. Almost all companies we've encountered so far can calculate the data internally once they've entered it into the system. The problem is actually data quality coming in. So what we need here for those cases, a really well-defined template or anything else. So what kind of data you need from your suppliers, what you expect, and in the best case also which kind of verification you expect from your suppliers. Or the other way is also using third-party platforms with quality reviews and defined scope. So basically, how do you handle those cases? First of all, is one question always for us boundaries. Really define which kind of boundaries you set for the data from your suppliers. Then, of course, one topic that's quite difficult, especially if you're going to the area of methods, is the question of recycling and allocation of recycled materials. So that's not only a scope 3 question, but also E5. So yeah, just let me audio. What's E5 in English again?
Circular economy.
Circular economy question here. So here also a question, the whole documentation where the allocation of the carbon footprint has taken place, how especially recycled content is allocated. So how do you do that? You first have to standardize your data collection, work with template, work with really detailed descriptions if you gather data. Then get the verification. I would always advise ask your supplier for third-party verification, simply for the reason the time you need to verify those data yourself. I mean, in the worst case, would have to go to tier 1, tier 2, tier 3 data. You usually don't have the time to do that. And then at the end, instead of self-built solutions, use third-party platforms for this. We've got those platforms on the market, and it's also you save a lot of time and effort, and especially later on discussion with the auditors of, oh, we've got supply data. Yeah, we audit the supplier data at least a bit, and then we start really to poke into the problems, and we usually know where the problems are, where the difficult parts are, where supplier data is not really reliable, and then you have to go back, and it also, especially if it's part of a CSRD report, you always get in trouble with the time frame. I mean, we are just at the end of our auditing season, and then we usually have these cases of, okay, the data is collected somewhere in January, we get it at the beginning of February, then we look into it, poke into it, and then ask the hard questions and get stressful for everybody. So these kind of getting your processes, your controls, your whole governance of your data clean is at the beginning a lot of work. It's usually seems easier, but at the end, doing those basic work at the beginning saves you, especially not during reporting auditing season, saves you a lot of time and stress at the end, and us as well, actually. Okay.
Jenny, maybe, I mean, it's more a related question, because now you're already looking also at supply-specific data, but there was one question in the audience that looked again at the emission factor choices, actually. Because, I mean, yes, activity-based emission factors are generally preferred. So if you have both available, right? So spend-based and activity-based emission factors, for example, but companies don't yet have, for example, physical activity data available, then what is the more credible approach from an auditor's perspective, basically? So is it better to use spend-based emission factors transparently, or to try to approximate activity-based calculations without reliable data? So is it methodological accuracy or methodological transparency that wins, basically, in an audit? I mean, you could use it also for the PCF example.
I think if you don't have activity-based data, so we are talking about tons of steel or something, then you can't use activity-based emission factors. So then you really have to go for spend-based. Otherwise, it would be more or less wild guessing, and your data would be less accurate than a spend-based approach. Also, transparency. You don't use activity-based emission factors if you don't have activity-based data.
Yeah. Okay. So then it's more the transparency and the logic behind it than trying to go for something that opens up a black box. And there was another question also on this piece of PCF and the verification behind it. So looking at the boundaries, where I guess also in the audience was asking that it is a lot of work actually to check for every single PCF if it's created to gate or created to grave, basically. So do you as an auditor also accept non-verified PCFs? How does this look like?
Okay, I think these are two questions. First of all, the check of the boundaries of the PCF should be right on the first page. So that should be rather easy. I mean, usually if you get a PCF, you've got this short description of what is done, what are the boundaries. So yeah, you have to do that check. But most of them are usually cradle to gate. What was the other question is non-verified PCFs. Depends. It is usually easier if it's verified. If it's not a verified PCF, we accept them, but then we need to spend the time to look deeper into the methodology, if make plausibility checks, especially if you have a supplier who claims to have far better CO2 footprint than the average data. It's usually for us from the plausibility perspective. If a supplier has a PCF and he's more or less near the average for activity-based data, we say, okay, sounds reasonable. If they claim to have a smaller CO2 footprint for the products, then we really have to dive deep into it. And then at the end, it's the question who pays the costs, either your supplier, and they can use it for also for other customers, or at the end you have to pay hours to dive deep into the PCF of your supplier.
All
I hope that answers that question.
I hope so. And also, Jenny, because we still have Lara's perspective on the topic, maybe we can see, because it's already 45, that we give her some space time to.
So I'll just hurry up a bit. Good. Can you just... Okay, so that's the basic message here. You've got the question always, what's your reference framework, then your allocation, and then your emission factors. That the factors we are actually looking at, and where the methodology must be comparable to be able to compare a PCF as well. So if we just jump forward, I think we are almost at the last slide, because we've got a short excursion on rebaselining, because a question came up this year quite a few times. I mean, as I said before, we are in the second year of the first web CSRD reporting. So basically, if you're improving data, you might have larger jumps in your scope 3 emissions just by improving your data quality. As we saw before on the first slide I've shown, there's a difference of almost 100%. So basically, you need a correct baseline, meaning that whenever you have fundamental changes in your data, you need to do this rebaselining. That means either structural shifts to merger and acquisition. So basically, if you buy another company, you have to do some rebaseline, disinvestment, of course, as well, or other major changes. Then, if you have improved data quality, that's usually if you move to a primary supplier data, and you, at least the GHG protocol, expect you to give yourself a so-called rebaselining policy, where you define when you're actually doing rebaselining. So it's usually required when with the one I've seen most around 5% with a shift in results of the baseline. One important point is it's 5% aggregated over the years, because we just had the discussion for a long time about, like, if we have a change of 4% every year, do we have to do rebaseline? Yes, because it would add up. So then you have to do the rebaseline in the second year. But usually, if you have done your baseline properly and systematically, rebaselining shouldn't be too much of an effort. And from what we are seeing at the moment, I think also this year and the next years, we get a lot of rebaselining almost every year. So that's not something to be scared of. It's just some part of it. And if you improve your calculation, you can do your rebaselining at the same time. So that's the short excursion to rebaselining. And then we jump, just since time is running away, to the key takeaways. Our objective for the audit is to plausibilize your data and to minimize the likelihood of errors. And also we try to share best practices. Sometimes people see an audit as something like an exam or so, but that's not the idea. It's actually, we are there to make sure you have made no mistakes, to help you correct your mistakes. I mean, it's also the same. We're at the end of the audit season at the moment. So we also are in the dialogue with our clients saying, okay, we found a mistake here. Please correct that here. Can you improve here? And so you have actually the proper data in your report at the end. What makes everything easier is solid processes with a clear documentation and responsibilities and controls. Saves you a lot of time and nerves, saves us a lot of time and nerves. Then we know that scope 3 data is not perfect. I know it's something we always see again and again, how clients say, okay, we've got assumptions here, and for us, it's more like a travel to a better result. So we know you very often a lot of spend-based approaches, a lot of guesses, a lot of estimates. And our idea is to improve your data quality together over the years, to improve your results, to actually get a better basis for your decisions as well. Then, of course, the question of comparability of PCFs is something you should look into whenever you get a PCF from your suppliers. And at the end, we all together, and that's what I just said at the beginning, we are not there, it's not an exam for you. We are there to help you at the end to publish results that are reliable, that has been audited by a third party. So actually your clients, your customers and the public can be sure that you're working with accurate data and assumptions that are as accurate as possible, and also that you're transparent about the assumptions you're making here to really drive your progress towards your net zero goal. So I think I can hand over to Lara now. Sorry for taking a bit too much time.
No, that's really cool. Thank you so much. And I guess, I mean, this is exactly the jump off point where Lara's work or our work actually comes in, because I mean, Lara, you've been working with a lot of companies trying to move from assumptions and averages to, supplier specific verifiable data. So really looking forward to also getting your perspective. So what does it actually mean to move from estimated scope 3 data to what audit ready supply chain transparency? Over to you.
Yeah, I really loved the whole presentation. I was nodding in the background the whole time. And I think also the questions very much showed the problem that then the companies have. So when we work with the customers, we really also see what Jenny, you said, right? Everyone is afraid of going into an audit now and very much sees this as a stress test. But I would say like the leaders very much see it as to learn and to get the feedback also from the auditors. So some companies we work together with, even they started now the whole process to work with an auditor, even though they don't need to report now under CSRD and so on, but they really need this data to be double checked for the financial market as well. You also stressed on the science-based targets, for example. A lot of banks are asking for that, also for their climate transition plans, to really see where is the reduction coming. Am I really getting the effects that I'm also claiming and planning for? And then also to reduce risk and cost in the supply chain. So it's not just about the CO2 calculation. Even though I brought an example to make it a little bit more tangible. So one of our customers, they actually also started 1 year ago when CSRD, so to say, was not yet in place. And they already said, okay, we are working with average data. We are missing the exact emission factors from our suppliers. And they were this way stopped to fulfill upcoming regulations. But also they said, for my decarbonization strategy, so really tackling risk costs to steer towards low carbon supply chains, they really need to understand where each of the suppliers are standing. So if you each year work with averages, you will always have the same result. You can do that for a first orientation, but to understand hotspots and also identify leaders, you really need to know where the suppliers stand. But then the issue is, and I kind of heard that question out from the PCF data, right? No matter which data point you take out in this realm, so it can be the CCFs, which you need for the emission factors, so the corporate carbon footprint of a company and the revenue, and then you can generate the specific emission factor. Or if you're looking into science-based targets of your suppliers, or in the PCF data, if you have hundreds and thousands of suppliers, that can be really, really, really stressful, and you cannot really solve it by an Excel file or a survey that you generate, even though you have a good methodology set up. So how we supported this company, our work in general with clients when they have this topic of how do I get audit-ready data on a scale, and I don't really need to look at each single data point, I don't need to check it each time, is that we leverage our platform, which is data-driven, to really bring in the methodology. So there's a setup already to look which kind of data points are we looking for, a defined methodology aligned with the greenhouse gas protocol, and then really to say in the scope we search the data, we see how good the data is it audited, is it self-reported, do we find it in databases on the website of the company and so on. So we use an AI tool to first scrape the data that's out there. And we did that in this case for the companies or the suppliers that were material to TeamViewer's supply chain. So it's not about doing it for everyone just to get data now in, but to really see, okay, what's the most important ones, the top suppliers having the biggest impact, and then also focus on getting really good data. And here our data then was extracted and given over to a consultancy, Five Glacier, who's working with TeamViewer to do the calculation. And then it was externally verified by TÜV Süd. So why is it in my case really good example is because you have a win-win-win on all areas. So you don't need to do the data checking yourself. You don't need to do the collection yourself. And you can really say in which data quality do you need the data. So our platform gives then out a quality check, and you can align it with ISO standard in this case. And then you can give it to consultancies, external parties, up to auditors to use it. And for them, a nice fun fact, which is not necessarily always the case, but here it was using the real data actually from the supply chain led towards also a methodology reduction, so to say, of the emissions. So they had a much better understanding where the real emissions actually stand. And extracting not just from this case, but then handing over to like a general setup of the platform. What we see is really first what was stressed now from Jenny and Gerrit before, right? Companies have the challenge of having a methodology alignment. So that's what we have as a preset up in the platform. We need to define which data point is searched for in which standard, then to build up using AI and also the option to invite suppliers to report their data a traceable source. So to each data point, if you have hundreds of data points, sometimes up to 300 data points per suppliers, in the end, you will always be able to go down and say this document or this source website and so on said this is a data point. So when an auditor later looks into, you can define every single data point if it is valuable or not. And there's, so to say, where we hand over then our work to, in the example, it was TÜV Süd, for example, and Five Glacier, or it would go into an audit where you have here the example. So we are super happy to take out the stress of building up the methodology and the scale to bring audit-ready data in. And with that, I hand over, I guess, to you, Sasra.
Yeah, I mean, we don't have so much time left, but I think, I mean, we've been looking at it now from very different perspectives. And this is also what I would like to look into as like one closing round. So really a reality check from both sides of the table, so to say. So Jenny and Gerrit, you looking at your last Scope 3 audits, and Lara, you looking at the last projects also with customers. What is the one mistake that companies repeat again and again? And if you could just give one practical piece of advice to avoid that trap, what would it be? And I mean, maybe let's start it the other way around, Lara, kicking it off with you if you want to.
Yeah, I would say using other Excel file and email. So I think the impulse is clear. Like often companies say like, okay, we can do it. We just try it out, and that's fine, but it's unnecessary. So you can really use systems that are already in place and get real data that you can use, and where you don't have to go 3 times in a refinement process and frankly annoy everyone with another Excel table. Handing over to Jenny, I guess.
I would say not documenting who is responsible for the data collected and where it's stored. And then we have the case of, okay, we're just right in the middle of the audit and we try to check the data where it's coming from, and it's like, okay, that's from person XY, and oh, there's things at the moment. And we don't know where it's stored. In the worst case, on their laptop somewhere. So just really define who is responsible, who's the backup, and where everything is stored.
Yeah, thank you. And Gerrit, last but not least.
I'm afraid I'll repeat myself, but I think it's not implementing basic controls in processes where manual labor or manual work by people is being performed. So we see a lot of mistakes which could be prevented by just a simple 4 eyes principle, for example.
Thank you. Yeah, and I mean, with that, unfortunately, we have to come also to an end of the conversation today. But I think it becomes really clear that Scope 3 in general is really entering a new phase, and how the conversation is also shifting. So really from reporting to this piece of traceability, data governance, and whatnot. And I actually think this also makes it even more interesting, because it really looks also at how it's governed within the company and how it's linked back to the business model. So thank you so much also for bringing all of your knowledge in here. And before we close, I just really quickly want to highlight two invitations that we have for those who just can't get enough of the conversation around Scope 3, because we have our next choice event coming up with Jamin from Bayer on April 2nd. So he's the sustainability and risk manager for procurement and sustainability at Bayer. And together with him, we will be looking at carbon pricing. So how companies really make the shift from carbon accounting towards carbon-informed procurement decisions. Like the first piece we looked at today, but then how is it really integrated into procurement? This is what we will be looking at in this next webinar. I think it's going to be super interesting. And secondly, and this is, I guess, for everybody also here on the call, a very warm invitation also to the upcoming Climate Transformation Summit, happening on June 10 to 11th. It's already going to be the 7th in a row. And this is where we bring together selected leaders from procurement, sustainability, and supply chain management from companies like Bayer, Bosch, Henkel, Lenovo, but also BDO. So this is where we will have the chance to continue the conversation. And I don't think maybe that the people here on the call are the right audience, but maybe you know somebody who knows somebody who knows somebody. We are currently looking for a new student to do an internship also with us in the area of marketing and event management, particularly for the Climate Transformation Summit. And I think it's a really, really cool event to get in touch with a lot of different stakeholders from the area who are all very action-oriented and down to earth, and want to drive an important piece of the Scope 3 story forward. So if you want to know more, then just get in touch with us, and we are happily sharing more information also on this position. And with that, hope to see you all in Berlin. And thank you so much also for this very insightful webinar. And as there were so many questions on it, yes, we will be sharing the insights then also afterwards with the people that joined today. Thank you so much, everybody, and have a beautiful afternoon.
Thank you,
very much.
Jenny and Gerrit.
Thank you. Goodbye.
Bye-bye.